Have you ever wondered how proprietary traders actually trade? In this video, you'll find out. In it, one of our highly experienced professional traders breaks down his trading bar by bar, showing you how he comes up with the exact entries and exit points, stop loss levels, profit targets, and risk reward ratios. He also discusses the market conditions that led him to take each trade, such as trend, support and resistance levels, and price action signals. You don't want to miss this video we produced for the trading community. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account.
Welcome back to another bar by bar. I'm going to start this off by showing some of the executions of the trades that we're going to be going through today in no particular order here. So here's a Google one that we're going to go through. This one they have the AI news. Here's the gap trade on Google. Here's a breaking news trade on Note. There's an AMD mean reversion short. And then here's another AMD short from yesterday. There's one that's not included because the trade is from today. I don't have that yet. I'll switch over to the charts. All right, so the first trade that I wanted to go over is a mean reversion trade in AMD, which is one of the setups that we haven't talked about yet on this bar by bar series. And basically, I'm looking for a stock to be overextended to the upside. And how do I define that? Well, you can see these brown bands on my daily chart here. And basically what they do is they measure a 4 ATR move from a 5-day low or a 5-day high. So that's this brown band here. And what you'll notice is that often when AMD has these large moves, it'll spike through that 4 ATR and it'll fail. Did it here, did it here, did it here. So that's how I like to define an overextension on the daily chart. And now we'll jump into the trade. So you can see that AMD on the daily broke this downtrend and had a pretty big move from about 80 to 100. And it was getting into that area where I would be interested in a mean reversion short. So you can see that it touches 99.80-ish, puts in a high. This is on Wednesday. And it starts to fail and roll over a little bit. I took a short here, which I did get stopped out of, but at that time, the market was very weak, and I thought that it could drag down AMD, but AMD continued to be relatively strong, but I was still interested in a short, so I was watching it, and what I started to notice was a lower high, and it breaks this little trend here where it got saved from Vwap, and I took a short, and the stop for that is going to just be above this high because I expect it to be a lower high. Comes down into Vwap, but I'm not going to short more into Vwap just because of the relative strength, and we did see that it is holding Vwap. And it does it again, and now what I draw on my chart is this wedge. So essentially I'm looking for a third lower high. So we have a high, lower high, lower high. You can see that it pops right into this uptrend area here, and that's just an area. I'm never drawing a line and saying like, can't get above this line. If it just gets above this line, I'm going to stop out. So as it comes into this line, I'm shorting a little bit more, and the stop's going to be this previous lower high. And the market begins to roll over. AMD breaks through Vwap, and I'm just covering it a little bit into this Vwap area just because we've seen it hold there, and we've seen relative strength compared to the market. But now at this time, the Qs are rolling over, SPY's rolling over, and it should follow. And you can see that we just get this really nice trend lower. And I always like to say that if the trend is going to be really strong, it's going to hold below that 9 EMA. And it does. However, when it pauses at 97.70, I'm going to cover a little bit because I'm a momentum trader. And when momentum slows on my trades, I want to ring the cash register and take some profits. That's what I do. And then it tests that day one prior close here. It's kind of hanging around, having trouble moving lower, but it's holding under it, and then it reclaims it, breaks through these EMAs, and the trade is over for me. So, anytime, like I said, I have this nice indicator here which shows me a 4 ATR move from a 5-day high or a 5-day low. Anytime a stock has a really fast move into that, I'm interested in a mean reversion short. But this is more of an advanced trade setup, and typically you'll get a much easier trade on the second day if it closes on lows, which we're going to go over right now. So you can see that it closes near lows. And I have marked off on my chart from the prior day, the prior close. And I also have like this 99 level marked just because, if we look from day one, kind of traded into 100, failed, was struggling to get above 99, failed below 99, couldn't hold above 99, couldn't hold above 99. So 99 is a nice whole number that I'm looking for to act as my resistance. And on day two, it spikes into that and goes red on the day. Now you have an option to take a back through open trade, and your stop would just be if it reverses this bar, but typically a back through open should work right away. But I didn't take that. What I was looking for was a VWAP continuation. And I think that on a weak stock on day two, that this is a really strong trade, especially after it pops into a resistance from the prior day and fails, has a move lower, and then you get a pop into VWAP. As it pops into VWAP, starts to fail a little bit, I'm shorting some, and then we get this like decisive fail here on volume, third highest volume bar of the morning. I'm shorting into this, and now the stop for the entire position is this recent high here at 98.41. And then it has a nice move lower, but I notice on the tape, there's a buyer sitting at 97.30. We can mark that off. They let it get below 30 cents a little bit, it holds. They let it get below 30 cents a little bit, it holds. And as a momentum trader, that's not something that I could ignore. I'm starting to cover. Pops into VWAP one more time. And now my exit for this trade is, if this is going to be a really weak stock, it's not going to get back above VWAP and hold. So I'm keeping that hard stop there at 98.41. But if it kind of reclaims VWAP, starts consolidating over VWAP, that's not something that I want to see. But we do get this really clean fail, much cleaner than this fail from VWAP. You can kind of see that it just wicks right into that, fails, struggles to make a new low, and that buyer is back there at 97.30. So again, I can't ignore that, and I'm covering. Pushes off, and now I'm out of this position. Moving on, now the stock is holding above VWAP. So I'm not thinking about another short just yet. One of my rules is if I think a stock is a short and it's holding above VWAP past 10 o'clock, it's probably not a short. And I learned that the hard way. And just to give you some background, my first few years trading, I made most of my money on the short side. And anytime I got a bias or was just too into my short idea, when a stock would hold above VWAP past 10 o'clock and I continued to try and short it, almost ended up being a loser. So that's one of my trading rules. If I think a stock's a short, but it's holding over VWAP clean after 10, probably not a short. I'm not going to touch it. Now, what I noticed was a buyer here at 98. You could see that it's holding VWAP and it's holding 98. Holding 98, they let it get a little bit below, but it rebids, and that continues on for about 10 minutes. But something I noticed was this candle, which was really interesting to me. I was watching the level 2 very closely. They held 98, spiked up to 98.20, and then they just rip through those bids at 98 and it fails. And you can see volume comes in there as well. You can see as it's above VWAP, the volume really flattens out and the volume really dries up. And then you get this breakthrough VWAP. And I'm shorting here. As soon as it watched that, it happens really fast on the level 2. Spikes up to 98.20. Boom, right through 98. On volume, I'm taking that short. And it's really simple. The stop is just above this candle. You don't want to see this reverse now. So it's nice. You could have a very tight stop there. I'm covering some as it slows down into this 97.70. Tape looks really weak. I'm adding back, and then you get this nice move through lows. I was not expecting that. That's a nice 60, 70 cent move there. I'm covering into that. That was my trade on AMD. That's a mean reversion short. And I did miss this trade, but I think another good setup is right here. That's a really fast move through low of day. So it's probably going to have some sort of bounce after that, especially if there's no news and it's kind of just following the market. But you see it bounces, and you could keep it simple. You could draw this trend line here, starts failing from the 21 EMA, fails, breaks the trend. That's another short there, and you would be targeting a break of lows for fresh lows. Next up, we're going to look at Google. So first, we'll take a look at the daily chart, and you can see this 108 level failed back in February, and it continued to fail from there. See, it touches 109, fails, but it's consolidating. It's holding over the major moving averages here, the 200, 50, and 100 day, and this was on watch for a breakout. And interestingly enough, on Wednesday, they had a presentation where they were going to talk about their AI language model, Bard, and that was happening at 1 o'clock. And just some thoughts there. Bard is their version of ChatGPT, and it's integrating into Google Maps, YouTube, Google Sheets, Gmail, Docs. And Google has 9 products with over 1 billion users. And there's also evidence that Microsoft's search business, Bing, which integrated AI a while back, it hasn't done well in terms of increasing their users on the Microsoft search engine. But no one uses Bing, everyone uses Google, right? So it should be popular. And the idea is that Bard is linked to Google services where hundreds of millions of people use it every day, and it could be a big hit if they work out the kinks there. So once their presentation starts, it spikes into high of day, fails, and gets below Vwap. And I'm sure this move here trapped a lot of shorts, but you could see that it holds down here at 108.40. And if we look at the daily chart, that is basically showing us that prior resistance is becoming support, but we can't just buy there, right? And you can see on this down move, the volume really thins out. So presentation starts, high volume, fails from high of day. It did hold Vwap here, and I did take a long just because of that really nice hold of Vwap, but it just wasn't going, was putting in some lower highs, and I got stopped out on that. However, when it reclaims Vwap, starts consolidating, some volume starts coming in, and it breaks high of day. Now I have an idea that everyone that was shorting, thinking, hey, this presentation is going to be a failure, because prior to this, Google did have an AI presentation that didn't go well. And I'm sure that was in the back of some traders' minds, and they were trying to get short. Now they're all in trouble, and you see that volume coming in over high of day. What I'm looking for is a quick dip to buy into. You could see that it dips into that previous high, dips into that 9 EMA. I'm buying this dip. The way that I would treat this trade as a stop is if it holds back below that prior high. If it holds back below that prior high, that's not what we want to see. That's a false breakout. We want this trade to work almost right away. So yeah, the stop is a hold below 110.30. And it begins to work right away, and we get a nice, $1 move. Momentum starts coming in, and I'm taking some profits into that. Now, I am holding a piece of my position in case this could trend into close, but if you missed this setup, there's another setup for you. You can see this 111.80, we'll call it 112. It's failing into there. It's having some trouble in that area, pulls back, gets below the EMAs, but quickly reclaims and starts curling up into that high of day. So how do I define a curl? Well, usually what I like to see is some consolidation. It's doing a really good job holding at highs, even though it's having some trouble at this 112 area. Looks like a failed follow-through new high. Looks like it's going to fail, reclaims those EMAs, and then starts curling up. So you got a green bar, green, 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 green. I'm buying this. Then it breaks out on volume. I'm buying a little bit more, and I'm scaling out into this up move. Now into the close, you have a trade decision to make. And, the idea behind it is the AI presentation obviously went well, and it's closing at high of day. Anytime you get a really strong move into the close, And strong you could define as high R vol move into the close on volume. And same goes for the short side. If you have a really weak close on volume off of some news catalyst, you've kind of, well, you just want to think about a potential gap trade. And then when I looked at the chart, I said, hey, this is a breakout. It's a higher time frame breakout on volume with a positive news catalyst behind it. So I'm going to take some into the close and I'm going to look to gap it for a continuation. Anytime, like I said, anytime a stock closes very strong or very weak off of a news catalyst and is doing R vol, in theory, the trend should continue the following morning. Now, this is just a gap trade for me, so I do see when I wake up in the morning, it's gapping up a bit. All right, it's gapping up about 2 points. I'm going to take most of the profits off the table. Some might say that's the wrong thing to do, but I think that for the gap trade, that's a high probability trade. Whereas holding into the open and looking for another move higher, that's a lower probability trade, but I do want to keep 20% of this position on. So I'm taking most of the profits, got a nice 2-point gap almost. So taking most of the profits and then just leaving 20% on to see what it could do. You get the dip off the open, you get a rip through the highs, and I'm scaling out into this move. I believe I took profits in this candle here. Yeah, so just to talk about that gap trade again, I've just found from my trading and my stats that if I try to hold the whole thing into the open, looking for another leg higher, that's just a lower probability trade, and I make more when I sell and keep a piece on. Yeah, and then I think I just want to say one more thing about this Google trade. A lot of people miss this. I think you just need to think about all the shorts that were trapped, and people were scared to chase it through high of day. But the idea, again, this is a higher time frame breakout on a positive catalyst. And, it's really not just a positive catalyst. AI has been a very hot topic, which has been catching a lot of attention, needless to say. And that's something that you need to think about. If this breaks highs and there's shorts trapped and there's a positive catalyst and the topic is really popular right now, this trade should just work really well. Like it really should just go. You should catch that momentum. In that case, I wasn't really scared to chase this move, and I was lucky enough to get that quick pullback and snag it near 110.30. So another trade that I wanted to go over, which in my opinion, it's not a good trade, but I think it didn't really work out well. I did make money on it, but I want to go over it because I think there's a good learning lesson here. There was a headline out during the event on Note, and basically the headline said they confirmed that they were selected by Google as a launch partner for integration with Bard. And you could see some volume comes in. Some traders at S&B were quick enough to take this move as the momentum was slowing down. They sold it. But what I noticed is this pullback on very low volume and then this spike right through the highs. I'm buying this. Pulls back on low volume. I'm sure there's some shorts getting involved here and then rips right back to highs. I'm buying this, but I noticed a seller at 240. The offers are stacked at 240. And I did think that this could squeeze. But again, a point that I want to make is if there's a seller there and he's not budging, as a momentum trader, you cannot ignore that. You need to be selling most of your position. Now, if it breaks above 240 on high volume, that's a different story. You could just get back in. Your stop is the recent low. So took this trade thinking that, shorts are trapped. You got the momentum, really not a big move, about a 30-cent move, maybe even a little less from my entry point. But just seeing that seller there at 240, spikes above 240 and fails, that's not what you want to see. You want to see a continuation. And then again, pops into 240, that seller won't budge. It's like a brick wall. And I'm taking profits on the whole thing. Moving on to a trade from today. Disney, you could see on Thursday that it gapped down on earnings. It's under all of its key moving averages. So the 200, 100, 50, 20, 10. It's been having trouble at the 200. And it's breaking below this entire consolidation here. So we could assume that there are some longs trapped. And what I like to do on big earnings gaps, I like to mark off the earnings day low and the earnings day high. And I like to watch those prices for the next few days because typically once one of those breaks, you'll get a continuation. So I was looking at Disney. I could see on earnings day, there was a double bottom into 92, held. So coming into today, I'm looking at that 92. I have my 2-day Vwap marked off. So that's where the Vwap flattens out at the end of the day. And 2-day Vwap is just a good indicator. It could be used as a reference point for determining whether the current price of a stock is above or below its average trading price from the prior day. And it just gives a good idea where the average buyer or seller is from the prior day. You could use that as an indicator to see where they're at in their position. If it's holding below, well, the average buyer from the prior day is red on their position. If it's holding above, the average seller from the prior day is red on their position. Right off the open, it spikes into that 2-day Vwap and fails, pops into Vwap, fails, gets below that 92. And this was a little bit of a trap because you could see that it gets below that low off the open, but quickly reclaims it. And I call that a failed follow through, new low. If you're trading a break of a low intraday and you don't get that momentum follow through and it reclaims, that's not what you're going to see from a really weak stock or a really strong stock on the long side. I call that a failed follow through, new low. So everyone that's looking for that day 2 short and slamming short below 92, they're not getting out. Well, look what happens. Now they're getting squeezed through the highs. And now all those shorts are out of their position, or they should be if they know how to manage risk. Now it can't make a new high and it fails. So we got a little failed follow through, new high. Gets above that opening high, can't push higher, it's failing. So now you have shorts that are out of their position, and I'm sure you have some longs getting involved as well, and now they're all flushed out, okay? But, I'm watching, I don't really see a pattern there for me yet. It's holding below 2-day Vwap, which is nice. Then I see it break down, okay? Not gonna chase it. You can see it bounce from like this 92 level before. However, my game plan is very simple. If it's holding below 92 clean, I'm gonna short and it should not reclaim. Now I'm watching it, okay, it's getting below 92, it starts holding below 92. And I like to see these wicks. Pushes up above 92, gets slammed right back down. You can see that happens for like the next 3 minutes or so. And you could also see that now it's holding well below the 9 EMA. This is a very simple short. I'm gonna get short in here. If it starts holding back above 92, and it breaks back above these EMAs, I don't want to be involved in that. So again, another very low risk trade where you know exactly where you're wrong. I'm taking the short, you get momentum through low of day, and I'm taking covers. Really nice momentum short there. 92 down to 91.50, starts consolidating. I'm watching the level 2 very closely. They're not letting it get below 91.50. There's a bidder there at 91.50. Again, as a momentum trader, can't ignore that. I'm covering, really nice move. It gets below 91.50. There's an offer there at 91.50, okay? But makes a new low only by a few cents. So failed follow through, new low, rips right back above 91.50. Starts curling up, breaking the 9 EMA, starts breaking the downtrend. That trade's over for me and I cover. All right, great. A little bit of a slower week, so that's all I have. Thanks.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.